The following is a paid program. The views and opinions expressed are those of the sponsor and do not necessarily reflect the views of Radio 1, WTLC AM 1310 The Light, and its management.
Welcome to the Home and Finance Show on AM 1310 The Light. Now it's time to get straight talk about financing a home and insider information about buying a home from the experts. And here they are, your hosts, Janis Bradley and Diana Rice-Wilkerson.
Good afternoon and welcome to the Home and Finance Show. We are your host. I'm Janis Bradley, owner-broker of JB Real Estate Consultants. And my co-host is Diana Rice-Wilkerson, mortgage specialist. She had to run out for just a minute, but she'll be right back. As you know, Home and Finance is designed to educate our listening audience regarding the process of purchasing, building, selling, or refinancing a home. And as you know, we try our best to provide straight talk about what's involved in each of these situations. Given that home ownership is a cornerstone to Americans' promise, we believe that everyone who desires to own a home deserves access to the best price, highest quality products in the marketplace for which they can afford. That said, if you are in the market to refinance, build, buy, or sell a home and you have not yet chosen a realtor or a lender to represent you, Diana and I would be honored and blessed if you would consider us. You may reach Diana at 317-402-5555. Remember, just turn that 55 into dollar signs. So basically, just remember, Diana shows you the money. Or you can reach me, Janis Bradley, at 317-590-7348. Now, as you know, we have gone big time in the last couple of years, a year anyway. Our radio show is accessible by way of telephone. As you know, you can call us at 239-1310. You can reach us on Facebook, website, or Twitter, which is enabling you to ask any questions that you might have, live time. So remember to go to our website, Home and A&D Finance Show. Wait a minute, let me start over. Home and ANDFinanceshow.com. So that's, you make sure you put that in there. We have a team of experts that are ready to handle all of any information that you might need to know. Now on with the show. Diana.
Yes, ma'am.
I've shared who you were.
Okay.
Okay, so you were the co-host, so I did share that you were Diana Rice-Wilkerson,
all right,
the mortgage specialist.
Okay.
I also gave your number out.
You did.
You know?
Okay. It's good to know.
So real quickly, Diana, we have such an exciting show. We really do. As you know, listening audience, when we have guests, we have the best of the best. Of course, I always like to say that because it rhymes. So you hold on to your seat because many of you have requested more information about credit. So the entire show will be dedicated to It's All About Your Credit.
Yay, 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 yay.
All right? All about your credit.
Absolutely.
So, Diana,
yes,
what's going on in the
well,
financial world?
Well, everything. But we're going to talk about credit today.
Right, I was going to say.
Hey, we don't want to talk about everything. We're going to talk about credit.
Absolutely.
But before we get into our discussion, I want to remind those of you who may be interested in finding out more about the home buying process that on March 16th, that's this Thursday at 6:30 at the McAllister's in Castleton Square area, 6020 East 82nd. I will be joining three other professionals, and we're going to be talking about the mortgage process, the home buying process. So we would love for you to come out if you are interested in doing so. I think you can register at Eventbrite. If you have any challenges with getting that done, do call me or email me, and we'll make sure that you have a seat. I think the room seats about 40-some folks. So if you're interested in coming out, we would love to have you. Again, that's March 16th, Thursday at 6:30 p.m. And we're just going to keep it very informal, but we are going to learn a lot about buying a home, building a home, home inspector, the insurance role, and the whole bit. And then we want you to ask all questions that you might have. As far as what's going on in the market, rates are rising. Just to be very blunt, you know, Janis and I tell it like it is, straight talk. Rates are increasing a little bit. And I'm talking about a little bit. So maybe, you know, where the rate on on Monday it was like 4 1/8, and maybe by Friday it was 5%, just for example. You're not talking about a lot of difference in monthly payment. I mean, really you're not, but just keep in mind that in general, rates are increasing a little bit. So for those of you who've been waiting for that 2.5 or that 3%, we're going to say this, if you're in the market to buy, build, refinance, or whatever you're thinking, there's no better time than now. Do not put it off because of anticipating a lower interest rate.
Right.
Janis and I remember when rates were, if you wanted a fixed, that was 18. If you were doing an adjustable rate, that was 13. And they were picketing outside the bank where I worked because they wanted to refinance into a 9% rate.
Right,
So,
right.
Where we have been enjoying rates over the past few years has been heavenly. And 4 and 5 and 6 is still
good.
heavenly.
Still good.
But, we just want to keep it real for some people who've been waiting or think that rates may drop back down. And I'm not going to say that they won't, but the indications right now is that we're not going to see any kind of super, difference, I would say, in rates in terms of going back down into the
Still
twos
a good
or the low
market.
threes. It's
Still
a
good.
fantastic market.
Okay. Well, I think what we need to do is get on with the show. Do you want to do the introduction? And
I will do the introduction.
Go ahead.
Before I do the introduction to our listening audience, because we have a lot to cover today and we want to make sure we get quite a bit of information out, we're going to ask that you just hold your phone calls for about 30 minutes. We'll let you know when it's time to call in. We definitely want to hear your questions. We'd love to answer your questions, but also we have the opportunity, as Janis said, when we bring you a guest, it's the best of the best. We have Anthony Ruiz in the studio today, and Anthony is the account executive with Credit Plus. Now, Credit Plus is a huge deal in my world. You're probably saying, Credit Plus? Who's Credit Plus? Well, we're going to find out who Credit Plus is.
You're always coming up with these names.
I know. We never talk about Credit Plus, but let me tell you, they are connected to me and to many of those of us who are in mortgage finance. So Anthony, he is our account executive at Fairway Mortgage, but he is responsible for a number of lenders and a wide territory. We are so honored to have him in the studio today because this is a busy young man. So thank you, Anthony, for joining us.
Thank you, ladies. I appreciate you giving me the opportunity to be here today.
Where we want to start, Anthony, is please give the listening audience a little bit of your background. Let them know what you do. Let them know who Credit Plus is.
I can definitely do that. I've been in the mortgage industry for 16 years. I've held different jobs in the industry. I started out as a title rep with a Netco title way back in 2000. And I progressed through the ranks. I was a regional manager for a large lender where I had 9 account executives report to me, where on the daily basis we were looking at credit, deciding what was going to work, what wasn't going to work for a lender to get approved. And when I took the job 6 years ago, actually 6.5 years ago now with Credit Plus, it was a good fit. My opportunity to enhance the home ownership process for my clients went to a whole different level. I do a lot of training throughout my territory, which is all of Indiana, Cincinnati, Ohio, Louisville, Kentucky, Chicago, and I have clients on the East Coast and one out in Kansas, Colorado. So I make my rounds. My background has been in the finance world, like I said, for 16 years, and I see a lot. I help my clients get their clients prepared for home ownership from a financial standpoint with the credit.
So what is Credit Plus?
Credit Plus is what we call a credit reporting agency. The acronym that we use is CRA. We are a third-party seller of information that the 3 main repositories or bureaus accumulate from creditors. So Experian, TransUnion, and Equifax are the 3 main bureaus that are out there that collect the data. And we actually provide that data to our clients, our lenders, that are looking to finance homes, autos, and things of that nature, consumer loans. That allows my clients to have access to the privileged information that you as consumers hold dear to your heart. We don't want your information getting into the wrong hands, so everything that we handle is encrypted and sent through safe and secure servers. So when our clients receive it, with your permission, they have access to look at you as a lending perspective goes and take it and determine what they need from your auto loans, your student loans, whatever it might be on your credit profile that allows them to make a credit decision on your potential home ownership.
So listeners, when I'm pulling the credit report, I'm pulling it from Credit Plus. Okay, who has bought the information from the bureaus and all of that good stuff. So that's why they're so important in my life. And so, Anthony, we talked a little bit about the services, but kind of talk a little bit more about the types of services you guys provide to everybody.
So we have at Credit Plus about 170 different products throughout the company. One of the main ones that we offer to all our clients are the credit reports. That's first and foremost. That's the starting point of the homeownership process. Tax return verifications. When you file your taxes, this is tax season, the IRS relieves that information back to us, which we in turn relate back to you to make income verification. Flood certifications to determine whether or not a property is in a flood zone.
Right.
As you know, the flood insurance can be a big portion of a monthly fee.
Correct.
If there's not a flood, if they're not in a flood zone, it allows for them to not have that insurance.
Correct.
So that we do that. We have the work number, which is a verification of employment, whether it's with income or without income, to determine that borrower has an employer that's giving us information through a secure site for how much they make hourly, that sort of stuff. We have what's called undisclosed debt monitoring, which allows us to monitor the borrower's profile through the entire underwriting process. So if they're opening up new trade lines when they're not supposed to be, we know about it. So we can allow the lender to know that they've taken on new debt when they are going to have that calculated into the ratios. And when I say ratios, that means your allowable income to the amount of debt that you're allowed to have to make a proportionate amount after all that has taken place. So
and I've worked for lenders who have signed up for that service. That service goes on. That's a separate service. We can sign up or we don't have to.
That's correct.
And you guys, this is why things are so different with lenders. Like something may happen with one lender and your buddy says, well, that didn't happen to me and all of that good stuff. I've worked for a lender who signed up for the service Anthony just described, who monitors throughout the loan process. Then other lenders might wait until toward the end of the process to do the refresh software.
That's correct.
Yeah.
It's called a refresh report. The refresh report is nothing more than another snapshot in time that allows the lender to see what has taken place over the last 30, 60, 90 days in the past, whereas the undisclosed debt monitoring that we offer is basically a daily snapshot. And if something does transpire over the course of the last 24 hours, within the next 24 hours, you will know that has taken place, whether it's just an inquiry.
I was going to ask, was it an inquiry?
Whether it's an inquiry or if it's actually a new liability, a new debt. So when we have a new liability pop up, we'll tell you the balance, the credit limit, and the monthly payment, and to who it's going to be made to, whether it's a Fifth Third Bank, a Chase, whether it's a credit card, auto, Lowe's. It doesn't matter who.
Right.
We catch it.
Sometimes people think they're home free because we're almost there to closing, so we think. And you're looking at refrigerators or some furniture or something of this nature.
Such
and
a
all
great
of a sudden,
point, Janis. Yes.
Up pops this inquiry. How do we explain that? And then, we both look at each other. Everybody looks at each other and said, "What happened?" And innocently, just being very innocent because people think it's okay.
Well, to your point, Janis, a lot of times a borrower that's in the final phase of a purchase, they hear the loan officer, like Diana say, you're clear to close. And they don't hear anything after that.
No.
They're excited. They're ready for that.
I don't hear anything either. I'm looking, waiting for
and
those
that's
words.
true. But what they don't realize is they're not done.
They really are
They're
not.
not done. So I actually had a client that they heard those words, and the husband went out and bought a Land Rover.
Yeah. Oh, yeah.
$100 and some odd $1,000 vehicle. Had to return it so he could qualify for his home. So, yeah, that happens on the daily basis.
It's like called don't use your logical mind. I always say
does that.
this is a business where you absolutely cannot use your logical mind. even with pre-approvals, it's the same. See, logic says if I've been pre-approved, then I'm good. So I can go ahead and live my life and go and shop and then shop for my house. But not really. You have to freeze your financial picture until you get the keys. I think you're standing up from the closing table, shaking hands, saying thank you. Because until you're at that point, we are watching. Big Brother is watching.
That is so true. That is absolutely true.
So I had another question. Why? Because we get this all the time. Why is the consumer getting one credit score when they go out on the internet? Then when they call the lender, they get something completely different. Why is that?
Diana, I get that. I get that question, no lie, 6 or 7 times a week.
Yeah.
And it's discouraging for me as a credit rep that has to convey the different types of industries that are out there. So we have Credit Karma, we have Experian, we have Discover, to name a few that you see either on ESPN or just on your nightly news broadcast, a commercial for Know Your Score, which is good. You should know your score. But you have to understand that knowing your score for a mortgage is significantly different than knowing your score for an auto or a credit card.
Okay.
So when you're talking Credit Karma, Experian, Discover, those are all what we call consumer credit reports.
All right.
So they're only taking a snapshot to tell you what your credit profile looks like for a credit card. And I have seen in many cases where the number, your credit score on Credit Karma is a 692. But when your lender pulls it, which is a FICO-driven score, it is a 592. There's a 100-point difference, and people just don't understand that, and I don't think it's fair that happens to the consumer.
Okay,
it needs to be closer together. So when we get to a point where we need to clarify that, it falls on deaf ears because they're heartbroken. They wanted the home, they thought their scores where they needed to be, and they're not. So.
And that is an excellent explanation. And I think just for the listening audience, just knowing and hearing this should help you. One thing you never want to do is buy a score for this very purpose, because what you're spending money for may not be benefiting you at all. We're going to take a quick break, continue to listen. We will be back in 30 seconds.
The energy and motivation to your afternoons.
Just in case you didn't know.
Here's what you missed on the Willie Moe Jr. Show.
Fill in this blank. I love my mate, but when they do blank, it drives me crazy.
When my mate interrupts me when I'm speaking, drives me crazy. I mean, if it's...
Well, you don't like it at all when someone interrupts you when you're speaking.
No, not
You hate when people interrupt you when you're trying to say something.
I
understand. That is very annoying when people interrupt people when they start talking. I can't stand it.
Willie Moe Jr.'s on your radio.
The Willie Moe Jr. Show. Weekdays from 3 to 6. Indy's source of inspiration and praise. AM 1310, The Light.
We're back to the Home and Finance Show. Welcome, everyone. We are listening to Anthony Ruiz, who is sharing with us. This guy is a big shot. He is telling us everything we ever wanted to know, and probably
and more.
But anyway, about credit. So make sure you're listening to us. We're not accepting any calls right now, so we want to get out as much information so it will help you maybe even ask better questions. So when we talked about the score that some of us get that hurts our feelings, is there a place that we can go on the internet to get a more accurate score?
When you're specifically looking for a mortgage, you want to go to myfico.com. There's also annualcreditreport.com where you can get a free copy of your credit report. Now, it's not going to give you a score, but it'll give you an idea of what your score, what's going on with your profile. So if you want to know if you've had collections, judgments, any sort of inquiries that have happened to you. Now, that's an annual thing that you get once a year for free. So I recommend going to annualcreditreport.com and getting that. But with trying to obtain a mortgage-driven score, talk to a lender, one that you trust, one that's been referred to you where somebody has had a good experience. Fairway's got that name here in town. They spend a lot of time and energy with their clientele. They do a lot with veterans. Here in town. And there's lots of good lenders. So do your research, do your homework. We were talking about that pre-show about how do you find out information. My wife is a Google nut. She loves to Google everything. So do your homework. Look at the ratings, but Fairway Mortgage is definitely a good place to start. Those are my 2 cents on where to get your score.
Let's get into some real meat. So,
can I ask a question before we get into the real meat? Because this has come up at least 3 times over the past 2 weeks for me. Anthony, explain to the listening audience why, like in this case, I was contacted for a pre-approval. I pre-approved my client, and then the next thing they started getting was overnight FedEx and UPSs from other lenders and phone calls from other lenders. And what they thought was that I was associated with these lenders. Yes. So explain what's happening when that occurs.
So what happens is, this is what we call in the industry a trigger lead. So you, as a consumer, apply for an application for mortgage. There are companies out there that buy that inquiry, if you will, that you're looking specifically for a mortgage. They turn around and collect as much of that data as they can, and they sell it to another company to allow their loan officers to go in and take that lead. And it's gotten kind of, in my opinion, shady because,
I would think,
well, this is what they're doing. There are companies out there that will pose as a processing center, or they will act as though they are the lender that they've been working with, when in fact they're not.
I see.
Used to be there would be another loan officer make the phone call and say, yes, I see that you applied for a mortgage. We would like to give you our information, let you apply with us if you would be willing to do so. Here are my terms and conditions for the loan that I can give you. That tactic has changed a little bit. I actually had a client of mine tell me that their client, the borrower, received a phone call saying that I'm your processor on your loan. We need these documents sent to us, and it wasn't even the original lender. So word of caution, make sure that you're just identifying who you're talking to and what company they are representing.
Well, how do you protect yourself from that?
You can opt out of being solicited for information in that scenario. What I always tell my loan officers is to remove the phone number from the application when they're pulling credit, because that's where they're getting it, to make the phone call. In the grand scheme of things, the technology is changing. So these companies that are selling that type of lead are capturing the data from the bureaus. And when a particular mortgage inquiry appears, they're able to actually go back and retroactively grab phone numbers, addresses, and stuff to mail and call the borrower, which, in my opinion, it's an invasion of privacy, but it's a big market. People pay big money for that type of lead.
Now, is the opt-out website the www.optoutprescreen.com?
Yes, that's correct.
Okay, so and I've been told that if you opt out, that also raises your credit score. Does that? Have you seen that?
Very
minimally.
Very
okay,
minimally. Yeah.
But to avoid these
unwanted solicitations. More so with credit cards and stuff of that nature.
Yeah,
that's a lot of what you'll get. I couldn't tell you the last time I got a credit card thing in the mail because I opted out years ago.
Yeah. So that's www.optoutprescreen.com. If you go to that website, it'll tell you it's very simple, very easy to do, and as Anthony is saying, that'll help you avoid a lot of unsolicited credit applications.
So, Anthony, what type of erroneous information affects a credit score?
Go ahead.
Whether it's error in spelling name or just what kind of things can affect lowering the credit score?
A big one that I see are father-sons. One of them has a collection, but they have the same first and last name.
Sure.
Sometimes the same middle initial. It becomes even a bigger concern or issue for either one of the father-son situation when they live in the same household, because Junior sometimes will have dad's mortgage, auto, and maybe a collection or judgment, tax lien or something that pops up on their credit report. It can be removed. It can be done. We do that on a daily basis for our clients. But when you go to apply for a mortgage and you don't know where to go or what questions to ask, it can be a pretty big hurdle to try and overcome. when in fact, with our company here at Credit Plus, we can do what we call a rescore, which basically updates erroneous or updates corrected data to the bureau at the bureau level through what we call a rescore, and it's just updating the bureau. So we need a driver's license and a social security card of the individual that has the misrepresented information on the bureau.
And let me ask you, are you only working directly with lenders? You're not working directly with the consumer, are you? Or are you?
No, we do not.
Right.
Okay, so just to kind of clarify, and what Anthony was just speaking about is if you were in the market to buy a home and say you approach your lender, and then your lender, hopefully that would be me, I came back and would say, hey, this is on your credit report, and it turned out to be that it belongs to your dad or it belongs to your son, we can help get that removed. That as a part of the mortgage process. And I can truly say Fairway is one of the few companies I work for that offers one of these wonderful products, which is rescoring. It is an awesome product. And one of the problems...
Describe that again real quick.
Rescoring is where we accelerate the reporting of the information to the credit bureau, and we supply our information to Credit Plus. They handle it all for us. And then at the credit bureau level, the changes are actually made in your permanent credit bureau report. And what we're able to do then, many times what we're dealing with are things that are affecting credit score. Credit score is lower. We're trying to raise it.
Okay.
The downside to rescoring, while it's a benefit, it's a cost we cannot pass on to the borrower. So therefore, a lot of lenders may A, not offer it, or B, if they do offer it, they have policies around accounts, because it's like $30 or $35 per account per bureau. So it can be quite expensive if you have multiple accounts. But the main thing is, going back to something Anthony said earlier, annualcreditreport.com, or does MyFICO give you any type of credit report? Or is it just Score?
Score.
Okay. What is it, the other one? CreditKarma.com. Look at your credit report every year, 2 or 3 times a year. Just make sure the information that's being reported is accurate, because that way you have a heads up already, and you can go ahead and proceed with trying to get that corrected earlier.
One of the things that you'll find, especially with the data breaches that are going on, the hacking that you hear about on the nightly news, I'm a victim of it. Somebody has my social security number, my date of birth, my name, and that I've had to take personal action to protect myself. So I do the annualcreditreport.com once a year. If I'm not applying for something, an auto or a credit card or something, and I don't have my credit pulled for something like that, I'm looking on my own to protect myself. So it's something that even as somebody that's in the business, I protect myself in that regard.
Okay.
Listeners, we're going to open up the mics now, so if you have any questions, please feel free to call in at 317-239-1310. And today the conversation is, it's all about your credit. We've covered quite a bit of information, general information about credit. This second half, we're also going to talk about mortgage credit. And one of the things we want to make sure that we get out to the consumer is to better understand what mortgage credit needs to look like.
Right.
Because oftentimes people think it needs to be perfect. I need to have a 700 and some plus score. I need to pay off debt just because I need to pay off debt. I just need not to be in debt when I buy a house. That could be a personal choice, but then there's also the notion that this is just what you have to be like when you get ready to apply for a loan. You can't owe anybody. So those are the kinds of things we really want to talk about also the second half, but we do want to hear from you, 317-239-1310.
So, Anthony, what do you think about credit companies who help clean up credit or saying they're cleaning up credit?
When we talk about cleaning up credit, we're talking credit repair. I battle credit repair companies on the daily basis. There's several ones, and I'm not going to go into names and specifics on it, but they tend to dispute the trade lines on a borrower's account on their profile, which for a lender, as Diana knows, trying to get a dispute removed is costly because you have to do a rescore. But at the same time, it gives a false pass on a Fannie Mae underwrite. So when we do the automated underwriting of a file and the dispute is on there, it has actually removed that trade line from the algorithm to being calculated into the score.
Okay.
So when a credit repair company does that, all they've done is masked what that trade line is holding, whether it's good, bad, or indifferent. It's not being acknowledged in the algorithm. So my my concern to a consumer is, why are you paying a company a monthly fee and sometimes a very large upfront fee to have something done that if you go to a reputable lender, they can help you get that sort of stuff figured out? And sometimes there's a small cost, but sometimes there's no cost at all, depending on what your situation is and what the ability may or may not be. So I would recommend, in most cases, do your homework, Google it, see what lenders out there will help you with that. The big banks typically don't do rescores. There are certain banks, I won't name them, but they won't do anything under a 680. And there are other banks, when you pull credit, it is what it is. And I worked for one of those banks, so I know for a fact that when you pull a credit report, no matter what's on that report, that's it.
That's it.
You're stuck with it.
Yeah, that's what you get to work with for the borrower. And if it's does not meet that threshold for a mortgage, I'm sorry, we're turning you down. You have to go on to the next lender, which is frustrating.
And again, we're just human. We just don't know. I mean, we don't understand credit, So I personally think that's so wrong, and I think it's unfair. And yet what Anthony has just described is real. I just received a lead this week from a client who, in order for her, and this came from a bank, in order for the borrower to qualify, borrower needs to pay off a car loan. The wife was going to refinance it in her name only, but that would not be an acceptable credit report then, because that would be considered like you manipulated the information, right? So, but the denial is probably going to come out debt ratio, right?
Right.
But so the borrower may think, oh my God, I mean, if this person didn't go the extra step, the borrower could think, I just can't qualify for a house.
Yes.
But in fact, you can. You just need to find the right lender. Now, Fairway will let you. We don't go for anything that's shady, but we can definitely, if you need to pay off debt to qualify for a loan, we will allow you to do that. You always want to work with your loan officer. I don't care what it is that you're doing. Before you do it, you want to work with your loan officer and make sure it's okay. And we're going to take this caller, and I want to then talk about debts that are perfectly okay to be on the credit report. They're negative items, but they're perfectly okay to be on the credit report. We want you to know those so that you don't go pay those off. Thank you for listening to the Home and Finance Show. Go ahead with your question or comment.
Okay, thank you for taking my call. I just heard you say there's certain things that are okay to be on your credit report. Is hospital bills okay to be on your credit report?
Yes. Now, this is the deal. Now, we're talking FHA loans. I'm just going to say because most of the time that's what we're talking. So we're talking FHA loans. So if you have medical collections, it's okay for those to be on your credit report. I want to say that, and then I want to say this. The danger with having medical collections out there without a payment plan is that the creditor can file a judgment over these unpaid debts. So while medical collections in the collection area of the credit report are not a problem, if they become a judgment, that's a different problem in addition to lowering your score. So my advice to those who have medical collections, make a payment arrangement and pay them. We're not going to take them into consideration in the underwriting, but definitely we don't want your score to get any worse as a result of them.
Okay, can I ask another question?
Absolutely.
I just heard that, and I don't know if you all can address this or not, I just heard that if you owe a debt and the debt has been sold to a collection agency, then you actually legally do not have any obligation to pay them because they've written it off on their taxes and they've sold it to a collection agency. Do you all know if that's true or not?
That's not true.
No, that you're still responsible for that debt. Mm-hmm. So what essentially happens in a situation like that, Sprint, AT&T are always ones that I see on credit reports where they owe them some money. Well, then you'll see a new collection down below where it says ABC Collection Company now has this collection, and it's for more than what it originally started out at. Mm-hmm. Now, you may not necessarily owe AT&T or Sprint, but you do owe that collection company that money to be returned to them for a liability that you signed for as a consumer. Now, there are once you pay it and get it settled, the further away you get from that, the better off you're going to be, because it's not going to impact your score as much the further away you get from it. It will remain on your credit report for 7 to 10 years, depending on what kind of liability that we're talking about. So there's different ones. Bankruptcies are one. For a Chapter 7, you're looking at 10 years on your credit report. Chapter 13 is 7 years from the filing date. So it really will depend. Judgments and tax liens are different from those as well.
Also, back to when there's a thing called a validation letter. You can Google it, validation letter, because anyone that does have a debt out there on your credit report needs to be able to show that they are legally able to report the information. And one of the things they have to have in their possession are your original contract documents. You understand that said you took this debt out or you were obligated. Yes. If they do not, then they cannot report it. So there's some, and when you work through some credit professionals, and I would only do this if this really matters. You know, if you work through some credit professionals, they may, that's what they're going to do. They're going to send the validation letter, make sure that creditor can produce paperwork that allows them to legally report the debt. And if they cannot, they have to remove it. But Google it, validation letter.
Okay. Thank you so much for your time.
You're welcome.
Thanks for calling. I read recently, or I was told, so who knows? Either I read it or I was told that the credit bureaus were going to discontinue reporting a lot of the public record accounts like judgments and liens. Is that true?
That, oddly enough, I read that yesterday in the Washington Post. So very, very recently,
Washington Post.
It came up yesterday. I have the article with me. It does reference that on July 1st, the 3 repositories are going to refrain from filing or reporting certain types of judgments and liens, simply because when they're being posted to the bureaus, there's inaccurate information, meaning they're missing a social security number, a date of birth, a correct spelling of a name. So back to our comment earlier about junior, senior, they're not including the junior, senior, so it's appearing on one or the other's report erroneously, or both of them. So when we see that happening, that's good and bad. It's good for the consumer. That means about 8 to 10% of the people out there that have this are going to have it removed. They're going to have a score increase of about, on average, 10 points.
We'll take what points we can get.
Absolutely, and that's a big deal in our world.
Yes.
But on the flip side, for Diana and Fairway, or any of my lenders, how are they going to know whether or not that's a true and accurate credit report?
Well, they just don't need to know everything. I'm the realtor, so, I don't loan the money.
Isn't it interesting how the viewpoint changes depending on where you're sitting?
Yeah, absolutely.
I was thinking when I had heard that, I'm like, dag, we will be checking and checking and checking. We'll never get a loan through the process because now we just use the credit report.
Because you've got Anthony.
Well, we use the credit report to tell us so much. It's a snapshot, and when you're counseling up front, you can tell the customer most everything. But if that goes away, I'm not sure.
Yes,
I'm not sure. Thank you for calling the Home and Finance Show. Please go ahead with your question or comment, please.
Hi, Kelly. How are you this afternoon?
Hi. I had a judgment against me, and it's on my credit report, and I paid it off 2, maybe 3 years ago, but it still lists the collection agency. Is there any way that, and I don't believe that it states that it's paid. Is there any way that I can get that removed, or does it still have a negative effect on my credit report?
Kelly, on the credit report, when was the last time you saw your credit report with that on it?
Recently, I have a credit card where it lets me view TransUnion and Equifax.
Okay.
It's still listed there, and I know that it's paid off.
So there are a couple things that you can do. You can actually go to those 2 bureaus and do what we call dispute that particular trade line, which we don't typically in the lending world like to do. But if you can show proof, meaning satisfaction of lien, at the courthouse, getting a stamped document from the courthouse showing that you've paid that, you can actually have that show satisfied. And it will update to the date that it was satisfied. So it will go retroactive. So if it was 2.5 years ago, that's what would report on the Bureau. It would update correctly.
Okay, so I will do that. But how long would that stay on my credit report? Because I asked after we're during the process of me making payment arrangements, and I paid it off. I inquired about having it removed, and the collection agency said that they would see if they could do that through the original creditor, but nothing has happened. Can I go to the original creditor myself and see if they would be willing
Yes.
to?
Yes, absolutely you can. And actually, I encourage you to do that. There are some instances, depending on who it's with, where you can actually negotiate that, where if I pay this or have paid this, will you remove it and show that it's satisfied, or even delete it from my profile? There are some creditors that will do that, some that won't. It happens about half the time. So I'm not going to say it's going to happen with everybody. Your big players like AT&T, Sprint, Comcast, they don't typically remove them unless it's an error and it's done in error. They will remove it. They're pretty good about that. But if it's a liability that was supposed to have been paid and was settled for less than full amount or whatever, they will let it remain on the credit report for the duration, whether it's the 7 or 10 year period that. Whatever.
Even if it's satisfied.
Even if it's satisfied.
Okay.
But like I said earlier, the further away you get from a satisfied negative, the less it hurts your score.
I got you.
It'll impact it less and less every year.
Okay. Thank you, Kelly.
Thank you.
Hi. You're listening to the Home and Finance Show. Go ahead with your question or concern.
My question is, recently I increased my credit limit on a bank card in order to pay off a couple of other credit cards that had a limit on it, not a limit, but a percentage that I didn't want to pay anymore. I did it to get the zero amount on those two cards.
Mm-hmm.
Now, when I checked my credit report, it automatically lowered it about 20, 25 points. My question is, once they get the information that I paid off those other two credit cards, will that up my limit or my credit report back up to where it was initially, or even higher, since I did pay off the two credit cards with the credit increase limit that I got on the one bank card?
Okay, so in that situation, it's going to be a period of time. So what I would not do is I would not close those other two credit cards, because what will happen is if you close those, you lose that good pay history that you've had reporting, and that's important to the algorithm in which it calculates your score. What you will see is an inquiry for the new credit card with a new limit, with a new balance. So I would give it 90, 120 days, and you should start to see your score start to climb back up. So I've done that on a couple of occasions, paid off credit cards with another credit card just to get out of a high interest rate for either like an 18-month interest-free or whatever the situation might be. One of the things that I would encourage you to do is try and get that balance down to below 30% of the credit limit. So if you have a $1,000 credit card, you want to try and maintain a $300 balance or less. That'll maximize your score. So I know you just did this, and it may take you a little bit of time, but don't feel like you have to have a zero balance. As Diana said earlier, it's okay to have debt. And a lot of people believe in the Dave Ramsey theory. My wife and I practiced that a couple different times as our lifestyles have changed. Sometimes you can, sometimes you can't.
Okay.
So there's nothing wrong with trying to get out of debt. But there's also, when you need debt, sometimes you have to have it to get it.
Okay. Whoa. Okay. All right.
Does that help? Thank you.
Yes.
Hey, I'd like to just take a minute to remind everyone listening that you're listening to the Home and Finance Show. Our guest today is Anthony Ruiz from Credit Plus. We are talking about credit, all aspects of credit, so we do encourage you to call in. Also want to remind you that we, as Janis said earlier, we have gone, I don't know, what was it, high tech or whatever?
Yeah.
We have a website now,
Yeah,
this is high tech for us, www.homeandfinanceshow.com. Also, check us out on Facebook. Like us on Facebook. Share us, you guys. You got to help us get the word out. And also follow us on Twitter. Now, we also have a new little, I want to say, I don't know, it's called a podcast, I guess. And if you missed the show, I think it was February the 18th, we had Gail Barnes with Barnes Financial on talking about taxes. She is a guru. She is outstanding. And we have her podcast out there on the website, which you can access for free, giving out great information. So again, our website is www.homeandfinanceshow.com.
Great. We don't have a whole lot of time left. So Diana and Anthony, since we're talking about mortgages 9 times out of 10, anything you really want to concentrate on so to let people know, the do's and the don'ts, so that we can do what we do, which is try to find you a home and get you financed.
Yes. Couple of things. On my side, again, this is general information. Now, you guys, there's always the exception, but I'm just giving you general information. Before you start paying off a bunch of debt, I would contact my lender, who I'm going to work with first, and work under the direction of that lender. That lender knows their guidelines, they know their rules, and you just want to work under their direction. Sometimes you just don't want to spend money and pay off debt where you're really not gaining any real benefit from doing that. Maybe it's better if you save it for your down payment or for reserves. So, no matter what, contact your lender, get someone you trust, let them know your situation and your circumstances, and also get some comfort around the fact that they can help you. Now, what I've seen with credit profiles in general, number one, I think the caller earlier asked about medical debt. Medical debt, just don't touch medical debt other than to set up a payment arrangement. I would say that's all really that you really want to do. And my concern around that is if you let that medical debt hang out there too long, it can turn into a judgment. And what you're working toward in terms of raising score and getting ready for financing can go out the window if that judgment hits. I mean, that can drop you 100 points or better. Easily. So you don't want that. One of the wonderful things is if you have a debt that is charged off, and this is with FHA, if you have a debt that's charged off, what comes to mind for me many times is an auto repossession, because we're talking sizable money. If that debt is charged off, you don't have to do anything with that either. So don't be trying to set up a payment arrangement. Now, that's the debt where the company has basically decided that it's an uncollectible debt. So they've charged it off, and the charged off words are on the credit report. That's one of the requirements for us. So again, you don't have to make payments. You don't have to do anything with that debt. Again, I just want you to be aware that that's okay as well. Set your payments up on automatic deduction out of your checking account. I recently had a client drop over 100 points because they missed a $25 payment on a credit card. I think the balance on the credit card was $37. So it was just an oversight, but you can't get it back unless that company wants to give you a one-time courtesy,
type thing.
Goodwill, and reverse it. That is done, and that's the kind of done that takes a long time for you to get those points restored.
Back on your feet.
So you can reach me. My name's Diana at 317-402-5555. I am your lender. I can proudly say Fairway is one of Anthony's clients, and we have the tools that will help you with your credit. And all that we ask is that you follow the guidance that you get, because it doesn't work if you don't follow the guidance.
Thank you for waiting. Hi, Jerry. How are you this afternoon? Go ahead with your question or concern.
Yes, thank you for having me listen to me on your show. I had a question. I wanted to know, and I'm just getting on, so I might be asking the same question that someone else already asked. And that is it 30% where I can be to make my score higher? 29. What is the percentage to build up my credit if I owe debt?
Sure, Derry. We have a standard that tends to work the most beneficial to the consumer, which is the 30% of the available credit limit to the balance that is owing, except when you get into the smaller credit cards. So if you have a $500 credit limit, you want to try and keep it at $100. So when you're doing your day-to-day shopping and whatnot, if you run it up over $200, $250, but when it comes time to pay the bill, if you can pay it down to $100, pay it down to $100. That'll help maximize your score over the course of time. So, and that really only becomes relevant when you're trying to apply for a loan of some sort, whether it's a home loan, an auto loan, or something of that nature. So that's typically what we try and recommend as a rule of thumb, if you will.
Okay. Well, I'm glad you told me that, because I'm paying off debt right now, and I'm just trying to, figure out how to boost my score up, faster. So that helps out a lot to know that works. And I guess I had another question, if you have the time.
Sure, go ahead, Jerry.
And that is, when it comes to, like, if you have a rental property and you're trying to get home equity line of credit, and you're free and clear on the property, is it a certain score you have to be eligible?
Every lender will be a little bit different on that one, Jerry. So I know some lenders are 680, some are 740. It just depends on what we call the loan to value, or the LTV that you're trying to achieve, and or the dollar amount that you're trying to obtain. So you'll have to check with your lender. You may want to get a hold of Diane and see if that's something that she can help you with. She's given her number out a couple times, but I'm sure she'll give it out right before we sign off this afternoon.
All right. Hey, thank y'all so much.
Thank you.
Thank you.
Thank you. Okay. Anything else that again we're
that we just need to say?
It's all about your credit. 317-239-1310. If you guys want to give us a call and shout of some questions or concerns, you don't have to give your name. You can be anonymous, but again, we want to hear from you.
One of the things we just probably need to reiterate also about credit is if you co-sign for someone.
Oh, it's your liability. It's your responsibility. So to my mothers and fathers out there trying to help out their youngsters, just know that it will impact your score if your child does not pay their debt. So and that's a tough one to try and correct, because a lot of times they will not call you as the co-signer. They will contact the person on the signature line, which is typically the child. So.
And we've also seen at times where the person that needed the co-signer, so let's say that it was the child, the sister, whatever, might be in a situation to really have the car refinance. A lot of times it's the car refinance into their name and taking it out of that other person. So that can happen. Yeah. So if I've co-signed for someone and then I'm trying to buy the house, you're going to have to get finance. And if you're making, now Diana, real quickly, and I've seen this in the past, if it was proven that particular person made that made those payments, how are you viewing that as a lender?
It has to be a joint account.
Okay.
We have to show that over the past 12 months, the payments have been made by the other party out of an account that doesn't have your name on it.
See,
guys, we've got to feel like that money that's being used to pay that account is truly coming from that other party. But with that, we can omit the payment out of the debt ratio.
I'm telling you, straight talk here.
Straight talk, insider information. Woo.
Do we have any time? Okay, great. We've got another call. Bonnie, how are you this afternoon? Go ahead with your question or concern.
Thank you. My question is, if you, I've got a son that might want to get out of a lease. Does that hurt your credit?
What type of lease, Bonnie? Is it an auto lease, or is it a lease to own for a home?
It's an apartment lease. He's in Massachusetts, actually, and just got an offer to move somewhere else.
Is it for a job?
Yes.
So there should be a clause within the contract for that would allow them to early terminate. Now, there probably will be a penalty. They'll have to maybe give up his deposit or something, but just know to have him pull his contract that he signed and have it looked at, if not by him, by legal counsel, so he can take a look at that, because I do see apartment complexes with negative impacts on credit reports because of either early termination of a lease or damage done to the apartment prior to leaving. So read the fine print or have somebody do it for him.
Okay, so even early termination, if you have everything agreed upon with the apartment complex, it could still hurt your credit?
No, not if it's agreed upon.
Not if it's agreed upon. No, if they know that he's moving for a job and is not trying to get out due to not liking it or whatever the other cases might be, he should be able to get out of it without too much of any damage to his credit.
Oh, great. Okay. Thank you so much.
Thank you for calling.
You're welcome. And, guys, that's the same, too, with a lot of folks leasing apartments who decide they want to buy homes.
Yes.
A lot of lease agreements today have a provision in there if you're getting ready to buy a home. I think you may have to prove to them that you're getting ready to buy a home, and you may have to pay 2 to 3 months rent. Sometimes.
Yeah.
But
unless,
at least
unless they can sublet it. Or get somebody else in.
Yeah. I used to see that. I'm not so sure how often I see it now, where it was in the contract if you buy a house. But, these apartments, nobody wants anybody to leave. They still want that money. So they might be changing the verbiage. And that is why it's very important. I know. Forget your wife's name.
Oh, Cynthia.
Cindy made a comment. I'm sorry, I went blank on her name. You brought some information I thought was very, very powerful, and that is research yourself.
Yeah.
So Google it. When you got a lease or anything you're getting ready to sign, make sure you are reading. And Diana and I always talking about little ink,
Watch for the little ink.
Little ink, because there's something there that could help you.
It's called a trap.
Or whatever. It looks like we're going to have to wind things up.
No.
We have had a great afternoon with It's All About Your Credit. Anthony, we cannot thank you enough.
Ladies, thank you so much for having me. It's been fun.
We're going to do this again because, again, it's an all day. It's an all day conversation. It's all about your credit.
Yes.
I'm Janis Bradley from the Home and Finance Show. I can help you with all your real estate needs as far as listing. For sale by owner, new construction. If you're in a home you're leasing now and you want to buy that home, I can help you through that process. My number is 317-590-7348.
And my name is Diana Rice-Wilkerson. I forgot to tell you earlier that the maximum mortgage amount now on FHA is $308,000. I just want to get that out there because it has went up, and that is significant. Again, Diana Rice-Wilkerson. My number is 317-402-5555. My job is to show you the money, and I would love to be able to do that for you. And you can reach me either on my website at www.loanswithdiana, that's DIANA.com, or you can feel free to call me, or you can text me. Thank you so much for joining us today, and have a nice weekend. Bye-bye.
Bye-bye.
You've been listening to Home and Finance with your hosts, Diana Rice-Wilkerson and Janis Bradley. For more straight talk about financing a home and insider information about buying a home, listen next Saturday at 1 p.m. or call 402-5555. That's 402-5555.
The preceding was a paid program.